Hello, today is Friday. It is the fourth day of January 2013. Welcome to today's silver video. I don't think there's any real need to put one of these videos on for the weekend. Really not much is going on, especially when you see stuff like this weekly time frame. Talked a lot about being within this range, and you're in the middle part of it right now for the most part. Very indecisive to say the least. Maybe this is still that key higher low from this point that's going to get it going, and that might be the case. And maybe this will be the move that does bring it lower. We have this lower high, lower low. Maybe we come in and then boom, it's going to take it lower. And that's the move that finally gives that 20 test. And maybe we're just going to have more and more and more of this crazy consolidation. However, I think it's pretty safe to say that before we have any monstrous moves that break 40-50, we need to first have a clear break above here. And on the same vote, if we have any move that's anywhere near the 20 number, we need a clear break below here. So as long as it stays within it, it's just a bunch of nonsense, really, for the most part. A lot of really short midterm indecision within the market itself. So the last week's close was 30. At 14:26 at Eastern Time, 29.91. It's 14:40 now, and it's 29.95. It doesn't really matter too much if it's an up week. I don't really put too much on what the exact closes are. I know a lot of other people do, but for me it doesn't mean too much. On the daily chart, we see within here. Well, this was the start of the quantitative easing, the last round, and it immediately surged higher from about 32 and change up to about 34 and change, and obviously couldn't hold on to it. Tried to consolidate for a while. Well, it did consolidate, but was unable to do anything more than just consolidate within here. And of course, that started, of course, the pattern of lower highs, lower lows. And what's interesting within this, you have this long consolidation in here. You got to watch out that the first move is the possible failed move. And you can't know that at the time. However, when you see a situation that comes up here, yeah, it's a little bit of a concern that it gave quite a bit back and never even aggressively challenged that level again on that particular day. But more so when you start to see this red candle and it's starting to break below this 18 average of lows, that's the real telltale sign right there that, okay, this looks as if we might be having that possible failed breakdown. So if we do a quick little pattern of the size of it, what we could do is we could take a look at the range of the top. So something like, let's get a box for this one. Something like this. We'll do it from where the breakout was to where the top happened to be. And then placed it down to where you break it down from, I guess. I don't know, but it just shows that the pattern from here to, or the size move from here to here was the same as from here to here. So maybe it's a matching move with it. I don't know. It's down to this Fibonacci support level. What's interesting now is it's still got a decent amount of ways to go up here to be able to get this to an area to say, okay, I think this selling might be a failure. We might be ready to start a bull market, but at least on this time frame, it needs to start to challenge this upper area in here and make a test from this high within here because it's bounced from yesterday's lows. And really, we're now playing back within this previous range in here. If the price action brings it back lower and starts to really break down below previous support, then at that stage, it's a lot of cautionary signs that there's a good probability odds that there should be a decent break below this level. And again, same thing, if you see this thing rally higher, it's just like this here. You have a move that goes down really fast, but just as fast as it goes down, it goes back up and back to the previous range kind of deal, which we seeded here. Then that tells you right there that that might be the failed move. And you can look at, okay, well, this was a failed move, that this was, then you go up to here, maybe that's the failed move. You could have like 4, 5, 6 failures in a row before it settles out to the whichever side it's going to go to. On the final chart, which is the hourly chart, it was really interesting last night because I didn't know what to think because I was watching the first few hours last night or just seeing the real decent decline. And I noticed that it was actually this one in here, that probably we're going to be in for a pretty severe day, because it's not normal. You get two candles like this. I think that was like 7, 8 o'clock last night Eastern time, PM. And normally these are the moves that take place at really from about 8 a.m. London time. That's usually when they start coming into play, but they happened last night. It's actually interesting or that it didn't occur. So again, don't know what to play into it yet. This still could be that possible failed breakout, but at the same point, this could have been just that washout, as they say. And a washout is going to happen. A washout is one large push to the downside as a bottom. Before it starts to break free. And you can guess, okay, well, this is going to be it. Maybe use volume, and there's high volume, and oh, that's it. Next thing you know, boom, it goes lower on even higher volume. So it's not easy to determine where the tops and the bottoms are actually going to be played. So thank you for tuning in. This was a little bit longer than I planned, but I still kept this under 400 seconds. And have yourself a great weekend. Bye-bye.